the Hall of Fame in-home objection clinic. We did the phone script objection clinic last week, and it was a tremendous success. Thousands and thousands and thousands of views in a week. And so we've got Nina Damjanovic. She's going to be the host and kind of help facilitate asking questions. Julius Gilger is going to pop up here and take my seat. I'm going to go try to get the gerbil back to work and see if we get the power back on. And Clay Sweet will be joining us. Alexander Strait will be joining us, and Gage Peart. So tremendous group of people joining on this training, and a ton of top objections. We made a post last night on Facebook and got about 30 objections, and some of them were copycat duplicates, just said a different way. So we trimmed that down to about 18 to 20 different objections. Great. And and we're going to do our best to answer those questions for you guys and put you in a position where you can kind of get understanding on how to answer these questions the best. So without further ado, I'm going to pass it over to Nina. Julie, do you want to join up here?
Hello, everyone. So in my opinion, I think this is going to be one of the best trainings we've ever had. Reason why is because if you learn objections and just have them in the back of your head in every single appointment, you'll just know what to say on command. So if you're in an appointment and you know that Mary's going to say she wants to think about it, you should know in your head what you're going to say right away. So this is going to be huge.
What's up?
You ready?
Are you?
I'm so pumped.
I'm ready. I'm always ready.
Yeah, let's go. You guys want to turn your speakers on or sound on too?
Can you hear me, Nina?
Yep.
Can you hear me, Nina?
Let's go. Let's get it. Yeah.
Can you hear me?
So I'm basically going to come at you guys with some objections. We'll go through one by one because we all do them differently and we all handle them differently. And some people might take away one style of objecting versus another, or of rebuttals versus another. So I encourage everyone to take notes and memorize these because we are going to run into them. And having them on command in the back of your head when Mary tells you she wants to think about it, or she can't afford it, or she wants to talk to her daughter, it's going to be really helpful. So let's get the ball rolling here. Okay, first one, okay? This one's a very common one. I think we go through this one a lot, and it's, I want to think about it. You know, you just went through this whole presentation with me, but I still want to think about it. Julius, you want to go first?
Sure. So, Mary, what is it that you want to think about? Is it the price, or is it that you just don't understand the coverage? I want to make sure that I can answer any questions that you may have.
It's the price.
The price. Okay. So is this just a little bit more than you're comfortable with putting away for this type of protection?
That's a little bit out of my budget.
Okay. Well, let's look at some options that might fit you. But let me show you a few different options. If we're talking final expense, I would show 2 or 3 different options below that price point. And then after I list those options out, I'd say, okay, which of these is more suitable for your protection needs?
Okay. So down closing.
Just down closing, and then but always still option closing, right, guys? So even if they say it's a little bit out of their budget, don't just show them one other number. Just do it like you're presenting the options again for the first time. Okay, let me show you 3 other options. So based on these 3 options, which one are you more comfortable with?
Right. So you don't want to say, oh, well, what's in your budget then?
No.
You just want to give them those options.
Yeah, I never ask what's in their budget, guys, because if you ask what's in their budget, number one, they're always going to tell you the lowest amount possible. Number two, if you base it on their budget, and you probably have seen this, sometimes the amount they're willing to pay and the amount of coverage they want don't match up, and they're not happy.
Okay.
So I'd rather just show them the options they're eligible for and ask them which one they're most comfortable with.
Okay. Awesome. All righty. I like that, Julius. Thank you. Alex.
What's up?
I really want to think about it. And it's not the price. I just really want to think about it.
Oh, that's perfect. So real quick, before I say my word for word response, I think an important thing to note is that the better you set it up in the beginning, the less of these objections you're going to get. So I usually try to think about it in my opening spiel by talking about the free look period. So I usually try to mention that in my opening spiel as that's going to be your time to make any adjustments you want. So when they say later on, hey, I want to think about it, I'll say, oh, perfect, Mary. Do you remember that free look period we talked about in the beginning? And then they'll probably sit back and they'll say, yeah, I don't know. And then, but as long as they acknowledge it, you got them because they agreed up front that they understood how that worked. And by bringing it up again later, all of a sudden you can kind of remind them how that works. Okay, perfect, Mary, totally understand. That free look period is going to be the time that you're able to adjust your coverage up or down, but we don't even know if you qualify yet, but we have to make sure that we get something. Oh, can you hear me okay? Just got a phone call from an agent who's obviously not on the training. So, hey, Mary, that's perfect. Like I mentioned, that free look period, that's going to be the time for you and Jim to sleep on it and decide if you want to move it up or down. But we've already established that there is a need for this, because if something happened tomorrow, you don't have anything prepared. And for most people, it usually comes down to either they don't understand the coverage or they don't like the price. Which one is it for you?
Yep.
Oh, it's it's really just probably the price. Got it. How much too much is it? And then I let them tell me a number. I don't want to do 250. We could do like 150. Perfect. So if we got you the best coverage that you can qualify for 150, that would make more financial sense. Yes. All right, let's see if you qualify. So asking those controlling questions allows you to control the conversation and get it back on track.
Okay. I like how you said that it's all in the setup, because it really is. They know what to expect from the very beginning. Right. So, okay. I like that.
Correct. And I just add one little thing in there. I always tell them in the beginning that the company needs to think about if they're going to allow you to participate in the beginning. So when we ever get that later on, it's like 100% you should think about it. But just like I told you, Mary, the insurance company needs to think about if they want to allow you to participate. So what we got to do today is submit the request so you can even think about it, and so then they can think about it as well.
On real quick, I think the resounding theme you're going to hear from all of us is just setting the table in advance is going to really alleviate you from having to deal with a lot of these objections. I think you're going to hear that a lot. I say the same thing that every single one of y'all say, but I just would press upon all of y'all is, setting it up in the beginning is really going to kind of, you're not going to get a lot of these objections if you set it up correctly. But I say pretty much the same thing that everyone else says. The carrier needs time to think about it. Perfect. We've got plenty of time. Maybe I didn't do a good job enough of explaining the value of this product. So is there anything that you don't understand that I might be able to, explain better? I put the onus on me to explain it to the client. That's my job. So just kind of wanted to echo off everyone else, but I think you'll see that, setting it up on the front end will really help you in the back end. So that's all I wanted to add.
Perfect. So we'll move on to the next one. This one, I would say it's more geared towards a mortgage protection appointment. We just moved in. We have to see what our finances are going to be. Clay, we'll start with you for this one.
So what I like to do is obviously, they're just moving in. I do understand that they are trying to figure out their finances. But what I do is I try to explain the importance of putting this protection in place and then centering this protection and then putting the rest of the bills around this protection. Because at the end of the day, Mary, you can have your ADT and your cable bills taken care of, your cell phone bills and all that stuff. But if something happened to Bill yesterday, then now that's going to be for naught because you can't stay in the home. So let's go ahead and put something in place, and then we'll work around the budget. So that's kind of what I do in the beginning. I don't really get that objection a lot. If I do, I kind of squash it. As far as when they first move in, obviously everyone's got, they are trying to establish their budget. But my biggest thing is if you don't have a home, then what's the budget for? So if something happened to you yesterday and you can't stay in the home, what is that brand new TV? What is that cable bill? What does that really mean? Because you're going to lose the home. So I like to, instead of people want to say, we're going to figure out our budget and then fit this in, I reverse engineer it and say, you should put this product in place to protect the home and then put everything else after that. So that's
Right.
kind of what I do.
Well, they're really quick to set up, the Cox cable, but not as quick to set up the
Exactly.
insurance, which is
Exactly.
one thing. So,
Exactly.
yeah, I like that. What about you, Julius?
Yeah, I like to do the same thing, but I usually like to take an approach of, while all these other expenses probably seem like priorities, do you think that's a higher priority than you and providing for your family? And then they typically will say, well, no. I'm like, okay, so if you didn't come home tomorrow, how are all those bills going to be paid? Who's going to take care of the mortgage? How are you going to leave this to your family? What is your plan? And my goal by asking these leading questions is to realize that they don't have a plan. And you obviously filled this out, Nina, because you were interested in protecting your family, protecting your mortgage. So let's go ahead and do that at an amount that you're comfortable at. I realize there's some expenses that are coming up with building a new home, just like most of my clients have, right? But let's find a coverage amount that you're comfortable with, a payment amount you're comfortable with. And then as finances adjust over the next 30, 60, 90 days, or even a year down the road, we can always review the situation and see if we need to increase your coverage, but something is better than nothing. Does that make sense, Nina?
Absolutely. I like that. And
I
one
like
thing
that
I
a
do,
lot.
yeah,
I like that a lot.
I like to show 100% of the mortgage. I show 75% of it and 50% of it. And what I always tell them is like, you don't have to protect the whole mortgage. In fact, most people don't. As long as you start with something, you can always increase down the line. And I feel like that would even, you know, beat that objection from the start. So, Alex, you want to go next?
Yeah, so I like what Julia said a lot, and I use a lot of the similar ideas, but a couple different word tracks. So I like to pit everything else against their family. So, oh, perfect. So always agree with them, right? So, oh, perfect. I'm sure it's been a whirlwind the last 2 weeks just trying to get everything straightened out. I totally understand. Most of my clients I sit with, correct me if I'm wrong, let me know if you feel the same way. But most clients I sit with, if they had to decide between their big screen TV or their family, most people would choose their family as a higher priority. Do you feel like the same way? What are they going to say? No.
Wow.
Or they say, well, yeah, of course. Okay.
That's
Go back to
fire.
I like that.
place thing where it's like, hey, so like, I understand trying to get the Wi-Fi set up and the TV and you're trying to figure out your new bills. Most people would agree that the family should be probably the first bill you're taking care of, protecting that, your biggest asset, which is your family. And then everything else kind of falls in place.
Alex, can you repeat that line? That was fire. Can you repeat that line? The family versus what was it? TV. So everyone can write it down.
So always agree with them first. So perfect. I'm sure it's been a whirlwind the last 2 weeks. Totally understand. Do these appointments all the time. Everyone I sit with, it's always crazy. I barely even have a couch or table to sit on, right? Try to agree with them, build a little bit of rapport, make it like this is no big deal. And then after that, it's like, so I just want to make sure most of my clients feel this way. I just want to double check with you. If you had to prioritize something in your life, what's more important to you, your big screen TV or your family? And I just sit there and 100 out of 100 say the family. Or if they don't say it, they start doing one of these. They're like, dang, he got me, you know, and they just know at that point. And then the last thing I'll say when it comes to down closing is, so Mark, I totally understand the hesitation. Usually at this point, you understand your family is important. We have to do something. Usually it's a budget thing. So does this make financial sense? The $250,000 for $230 a month, does that make financial sense? Or do we need to adjust? I never use the word comfortable. I know Julius does. I personally don't, because I don't care if it's comfortable. It's a priority. So I always say, does this make financial sense or do we need to adjust? They'll either say, yes, it does, or no, we need to adjust. I'm not giving them the option to say no. It's either no, we need to adjust, or yes, it makes financial sense. So that's how I transition into my back to the closing question.
Drop a fire emoji in the comments below if that was fire. Good. Anything to add to that?
Yeah, I mean, I really, whenever you get in a situation like that, I think that reiterating that I understand where you're coming from as far as your budget, but let's remember this isn't a bill, right? This is protection for you to keep your home forever. A bill can be replaced with another bill or a lesser amount. Like, I don't want you to focus this on a bill. What you're doing today, John and Mary, is you're putting up a fence around your home saying if anything happens to me, don't not scrap it back to our parents or, you know, asking for help. So I don't want you to look at this as a bill. I want you to remember this is giving you the peace of mind, knowing if anything happens to you, this is your guys' home. Just to touch off of it. Agree with everything that you guys said and setting up the budget, but I think conveying to them, I don't want you to look at this as a cable bill or a car payment. Like, this is for you to keep this roof over you and your family's head. And so your wife here doesn't have to get another job, and just something of that nature.
I like that. Awesome. This is another one. that we get pretty often, I feel. I need to speak with my kids, or I'd like to talk this over with my daughter before I commit to any monthly bill or monthly price. Julius?
I thought you were going to go to Gage. You guys still.
Oh, Gage, go ahead. Go ahead.
Let him go.
So this is if they said they need to talk to their kids.
Yeah.
Okay, perfect. So let's call them. And if it's during the day, of course, they may be working, they may not be. So I totally understand that you need to talk to your kids. I would need to talk to my kids about this as well, because they're involved. They're going to be the beneficiaries for this. But I want you to keep in mind that I know if my mom asked me about some type of protection, I would tell her I would take care of it, no matter even financially I couldn't. So today we have the opportunity, one, to see if you can even qualify for this, but two, you put the protection in place for your child so they're not stressed about it. Because you said you had 3 grandkids, right? Yes. Okay, cool. So I'm assuming she's working for your grandkids' future. She's not working or saving towards your final expenses. So let's give them a call. And I want to explain this to them because obviously I'm the one that's licensed here and I can explain it thoroughly how this is going to protect the family. Because I know that if, you may talk to them, you guys are going to talk about this being another bill, but this isn't a bill. This is preparing for the future on the worst day of your kid's life.
Okay, I like that.
So this one, when they're talking to their daughter, or if you get this objection, typically it's, you probably didn't set it up properly in the beginning, just like everyone's talked about before, because we don't get this one very often anymore. In the beginning, when I started, I did, but now it's like, I don't hear that. And the first thing I always tend to go to on this, Nina, is, well, number one, Mary, we don't know if we can even get you approved, right? So talking to your daughter about some hypothetical thing, some mythological policy that you might get, doesn't do you any good. Does that make sense?
Yep.
Plus, let me ask you this. Do you really want to be a financial burden on your family?
No.
No, right? I mean, and that's why you requested this information. So they just gave me the ammunition. They just told me no, right? So why would we ask your daughter to see if they're going to, what they think? Because at the end of the day, we realized today, through the questions we went through, you obviously need this. Am I right?
Yeah, but she's going to be paying the premium for me.
Totally understand. Well, right now we can't make a decision anyway. So the matter of it is how much are you, at what, lost my train of thought. We know you need this coverage, but at what amount do you want to get, right? So let's see if we can get you approved first, because that's the first step. And then at that point, if you and your daughter talk about an amount that is a little more comfortable for you or a little different amount, we can always adjust that. Does that make sense? So just try to find the path of least resistance in there.
That's huge. Educating them on how much a funeral costs. I think bringing that up throughout the appointment is really important. Like, do you want your daughter to go out, 10 to 20 grand for your burial? Does she have that kind of money lying around? I think it's huge to educate them on that cost. So I like that. Clay, what about you?
So I kind of piggyback off what Gage was talking about. I talk about, if my mother called me, I'd definitely want to be a good son and say, don't worry about it, Mom, I'll take care of it. And, yes, we will both feel great about that answer for the 15 seconds that we talk about it. But if she passed away prior to FFL, I would be in some serious trouble, big time trouble. Okay. So I just kind of let them know, like, listen, Mary, we've established that you've got about $2,000 in your savings account or $1,500 in your savings account. You're 75 years old. Your daughter, you've been saving your entire life. You don't have much savings. Does your daughter, your daughter's half your age, she's probably got half of that in her savings account. So do we realistically think that, there's ancillary costs, establishing what they wanted to have happen in the beginning, cremation or funeral? The average burial is 10 to 15,000. Does your daughter have 10 to $15,000 lying around? So I just kind of piggyback off what everyone says. I kind of talk about like what I would say as a good son. We all want to be good sons and good daughters. But at the end of the day, that's going to be detrimental to me prior to FFL. If something happened, I would be in some serious trouble. So I just kind of, piggyback on what Gage said, what Jen said. That's what I say. And I get real serious about it. And I'm like, look, you have, not only we got to get you buried, you've got a home here. We've got to get everything moved out. there's going to be some cost involved. So does your daughter have $20,000 lying around earmarked for your funeral? So let's go ahead and take $50 a month, Mary, and put something in place to where if you pass away yesterday, she doesn't have that burden upon her. So, that's kind of what, I talk about. And then I talk about the carriers, like, listen, we don't even know if you're going to get qualified yet. Let's go ahead and put some coverage in place. Then I'll be more than happy to get on the phone with your daughter and explain, because I don't want you to have to explain the value of this product. That's my job. I know this is important to your daughter as well as you. So I'd be more than happy to either get on the phone with you right now with your daughter, or we can set up a time after you've been approved, if you get qualified, to go over the options that are available to you.
Well, I'm going to be super quick,
Boom.
Nina. I know we got to keep moving. I'm going to be super quick. One thing that Clay said that I personally stopped doing is, does your daughter have the 20,000 put aside to take care of this, something happens? Because you could pigeonhole yourself into a position. Well, yeah, she's a lawyer. And you're like, oh, crap. Right? You kind of set yourself up for failure.
But I got a rebuttal for that, bud. So go ahead.
Do you really? Oh, I love that.
Yeah, me too.
Do you? Okay. I mean, like we all do. I'm just trying to avoid any roadblocks along the way, obviously, when we're overcoming objections. So right away, the very first thing, when I walk in a home, before I even get started, I ask, are all the decision makers present? That is one thing I've started doing for mortgage and final expense. Hey, by the way, is all the decision makers present here today? Oh, no, I'm probably going to have to talk to my daughter. Oh, let's get her on the phone. Oh, I can't, she's at work. Let's reschedule. I won't do it without it. Like my time's too valuable. I've gotten way through too many appointments, getting to the end where I can't overcome it, can't get them on the phone, whatever. So I don't do it unless we got everyone present, even if it's just on the phone. But if it does get to that point, or if it did get to that point, Paul McLean has a training about talking about how this is a gift. And so he goes, hey, Mary, real quick question for you. When you buy gifts, in the holidays, it's really present. But when you buy gifts for your family, do you ask them for permission to buy a gift, or do you just buy them a gift? No, I just, buy gifts. Okay, perfect. So this is a gift you're leaving behind to your daughter, to your son, to make sure that when they are dealing with the worst week of their life, the last thoughts they're having isn't, how am I going to pay for this? The last thoughts they're having about you is, I'm so glad my mom got that taken care of, even if I didn't even know it. You want them feeling gratitude towards you when they're thinking about you, not angst about how they're going to pay for everything. Don't you think that's a gift worth giving, Mary? And what are they going to say? Again, they're going to think, actually, yeah, it makes sense. So let's find something that makes financial sense. And if this doesn't make financial sense, how can we adjust? I always go back to financial sense or adjust when I'm closing. But Paul McLean said that. I use that all the time.
Question for you, Alex. So when you go in and set that up with asking, are all the decision makers present? If they say, let's say the husband and wife are there, but the daughter's their decision maker, they don't do anything without their daughter, would you just reschedule the appointment? Or
yep. I'll try to get them on the phone and explain, like, literally just like we do in the home, like in our first 5 minutes in the home, we're setting everything up. Like I do not go through a presentation unless I feel like I got a lock in the first 5 minutes, because we just waste so much time on these long presentations and we got a lot of families to protect. So I will set it up right then and there, call the daughter, get her on the phone, say, hey, I'm sitting here with your mom and dad. They had filled out a request for me to come over to explain to them their final expense insurance. They said they would like to have you involved. It takes about 20 minutes. Is now a good time, or should I come back at a different time? I'm taking control right then and there, because like once you go through enough presentations that you sit through 30 minutes and you don't get a sale and you realize the little things you could have done different, you stop putting up with the crap. So you just figure it. I don't want to say any bad words, but you just figure it out how you can take it away in the setup and on the front end.
True. Okay. I like that. These ones kind of go hand in hand. So I want to talk to my kids, or my kids are well off. My son's a doctor and my daughter's a lawyer. They can take care of this for me.
All right. Got it. So Mary, when we sat down, I asked you, why do you fill this out? You said to me, you don't want to be a financial burden on your family, correct?
Right.
Okay. So you realize by not getting protection in place, you're doing the complete opposite of the whole request that we're sitting here for, right?
Yeah, but I thought this was free.
Right. What made you believe it was free?
I just thought it was.
Okay, it's not. So anyway, and then I just go back to what I'm talking about, because that, like, when anytime someone says something stupid, just don't pay it any attention, right? Like it's not a free thing. But I always go back to the why, right? They told me why we're doing this. And at that point, they're not connecting the dots. So the why was you didn't want to be a financial burden. So, well, you're about to be a financial burden and anything can happen tomorrow. Right. And they're like, oh, well, I don't think anything's going to happen. Sometimes I'll say this, you guys may have heard me say this. Well, did you think Kobe Bryant expected to pass away when he did? I've said that, and it's helped me close deals.
I said that once and did not get away with it.
I've probably used that. I've probably used that about a dozen times.
Yeah,
You know,
Me too.
people
Me
accidental.
too.
Yeah, I'm sure Kobe Bryant wasn't planning on dying in an accident that day either.
Yeah.
It's a great line.
it works, guys, but everything
Yep.
works a little bit, right? Not
Right.
everything, no matter what any of us say in here, number one, you guys can all agree, I'm sure, nothing's bulletproof. Nothing's 100%. We do our best. And the thing is when someone says something stupid, you hear Sean Mike say something like, you say that again? Like, wait, what? Right? Like, hold on. So don't feed into the comments sometimes. You just got to keep moving forward and pushing. So
Yep.
there's no magic answer to any one objection, but everything about objections is how you set it up.
And that's why it's good that we have so many people on here going through their objections, because everyone says certain things differently. The Kobe Bryant thing didn't work for me, but it does work for Julius. So it's all about your time, what works for you. So, okay.
So real quick before we move on, I think that you can also ask them or tell them, look, we're all going to leave a legacy, whether that's good or bad. And right now you're telling me that you want to diminish your legacy and expect your kid to drain a savings account or drain a month's worth of income. So do you really want to leave that bad of a legacy? Something of that.
That's a good,
Yeah,
that's really
good.
good. Okay.
Yeah. Do you really want to live a life of integrity and die with disappointment? That's like live your whole life with integrity and you pass away and your family's full of disappointment because they have to pay for it.
Yeah.
That's awesome.
Sean Mike recently said this just this week. He said, you've lived a life of dignity. Why die without it?
Yep.
That's so true.
Very true. Very, very true.
This is another one here. So you just showed me a quote for $100 a month, and I look at you and say, oh, well, I just saw a commercial the other day and it was $1 million of insurance for $9.99 a month. Why is this so expensive?
I usually laugh first. I'll let one of you guys go for that one first.
Clay.
I really just say, listen, you get what you pay for. So if you think that you want to protect your family for $9.99 a month, then, good luck. And I kind of piggyback off Jen, and I just kind of laugh. I mean, it's, I'll kind of talk a little bit about, like, do you have any friends that have policies that started out $9.99 and then, next thing you know, it's $300 a month, that's, do you have any friends like that? And traditionally they'll say yes. And I'll say, this is set in stone. The value of this product. I'm sitting in front of you talking about this product. They're talking to you about it on a TV. They're sending out these blanket policies to anyone and everyone. Why would I get the same policy that you would get? And I'm 38 and you're 78 in poor health. Like, that does not make sense. So, just kind of shooting it down. I mean, of course, we don't want to bash other companies, but I just kind of say, I'm an actual person sitting in front of you. Our programs are not cookie cutter. There's a reason why I'm going through this client suitability sheet or financial inventory sheet to make sure that I put you in the best position possible. So you're looking at an advertisement on TV saying, yes, I want this. And they're just sending out a policy. So I don't know about you, Mary, but I don't think necessarily I want to put, my family's future in the hands of $9.99 a month. For the cost of a fast food meal, so just kind of, and, we want to be respectful, but, listen, I think they know. I don't think people are as dumb as they act. I mean, they know. They're just trying to say they have some type of coverage, but it's our job to educate them that what they're getting is just, not even close to up to par.
I like how you said as cheap as a fast food meal.
That's pretty cool.
That's pretty interesting. Gage, what about you?
I typically chuckle like all you guys do as well. And I ask them, have you ever called?
Mm-hmm.
And then they'll say nothing. I'm like, well, why haven't you called? And they'll say whatever. I'm like, well, I mean, I totally understand you see the advertisement, but there's tons of infomercials on the TV all the time, right? And most of those times with those infomercials or those $19.99 type products, they're kind of like, I don't want to say they're cheaply made, but there's a reason why they're $19.99. So for them to sit there and advertise $9.99 to the general public is just a bottom tier. Like, I could tell someone that it's $10 a month, but I'm talking to an 18-year-old, not you who are 71. So I just kind of asked them and just like challenge them on why they haven't taken that approach. And I'm here, I'm a state licensed underwriter. All these are state regulated programs. And what state regulated means is just like gas, there's a price here that they can go to, and there's a price here, and it has to be in between those. So that's talking about a general national product. We're talking about here in the state of Texas. So something like that.
I asked one easy question. Sorry about that, Alex. I just say, why do you think they're advertising a $9.99 plan? Why do you think?
Yeah, I mean, I don't know.
Do you think you'd get the same rate as I would? And assuming they're 60 or 70 or whatever?
No.
No. So what do you think the likelihood of you actually getting a $9.99 plan?
It'd probably be a little more expensive.
Right. They're just getting you to call, right?
Right.
Okay. So just understand the purpose of that is just an advertisement. They want you to call. And when you call them, they're going to give you prices about the same I'm showing you. But here's the thing. Those plans are not equivalent to ours because I'm actually able to see what you're eligible for because I'm verifying your identity and your health conditions. They're not able to do that over the phone. So their benefits are not going to be as good as what we're able to offer you because you're sitting here with a state regulated underwriter. So with that said, and then go right back into what I'm talking about, like it's no big deal.
Okay.
Only other thing I might add is I point back to the credibility sheet and say, hey, Mary, again, it's all about the setup. Hey, Mary, remember how I said that I work with all the A-rated companies and I work for you, not one company? Do you see that company here on the sheet? I won't say a word. And then they'll be like, no. Do you think maybe there's a reason they're not here on the sheet, Mary? Like, I know I'm licensed and everything, and I understand that you're not, but trust me when I say there's a reason they're not in the sheet, and we have the companies that are best for you, not best for the company. So I'm gonna do what's best for you, okay? Get them back on, try to make them realize I'm on your side here.
Mm-hmm.
Okay. I like that. All right. The next one is, I already have a policy through work, and we'll just roll through these. Anyone can answer. Gage, what do you think? I already have a policy through work. I don't think I need this.
Perfect. I'm honestly happy for you that your employer offers that, because there's a lot of employers that kind of took that away to put more money back in their pocket. And I'm glad you're participating in that, because you're probably paying like 15 bucks, 20 bucks. And I'm like, yeah. Okay, perfect. Yeah. So the reason why you're paying 15, 20 bucks is because your company's paying majority of it. And you're actually just in a group policy. You're just a participant. So just how people have company cars or company phones, like you got them while you work there, but as soon as you resign or they fire you or you retire, those go away. So that's great that you have that. Most people, like I said, do, but they're starting to take that away. But everyone I meet with wants to be in control of their family's future and have something that they own and they're not a participant in. So that's great. And I still think you should keep that coverage, because everyone I meet with that has that keeps it as well. But everyone I meet with also wants to own their own policy.
Right.
If I can piggyback off that super quick, Paul McLean has a great training on this, and this is a great example of facts tell, stories sell. Paul McLean, I'm just going to spit it out exactly the way he says it. He just asks, okay, do you understand the difference between work coverage versus private coverage? And sometimes they say yes or no. Sometimes they have an understanding. Okay, Mary, well, let me just kind of explain to you the difference. And just in my experience, we had a coworker and their uncle was working at a company for a long time, and they ended up getting sick, and they had to go on short-term disability for 3 months. And then after that, they still did not beat their cancer, beat their sickness. And so then they had to go on long-term disability for 9 months. And so now a whole year has gone by that they haven't worked and they've been getting disability, and they still hadn't beaten their sickness. And now the company had a choice to make. And even though they were very important to the company, once you run out of all that disability, they had to make a decision and they let him go. And because of that, he lost his work insurance and he wasn't able to keep it and he passed away 4 months later and the family wasn't able to get any coverage. So definitely keep your work coverage. It's great for like the quick one-off stuff that may happen in life, but you want to make sure that you're prepared for every situation, which is why most people would agree for their family, it's important to have something that they own, not their company. That way you don't end up like my coworker's uncle. Does that make sense? And you use the
Perfect.
story to try to take away everything they could say about disability and everything else.
You know, you edify them and educate them. So edify them for getting some type of coverage, work policy. Good job. You know, some people don't even do that. You know, more than likely what you have, Mary, is an accidental policy. It's called a traditional mortgage protection policy. A lot of banks did away with that in 2008 because of what happened. There's a thing called solvency ratio. Banks over leverage for every dollar they have in the market, they over leverage it by 10. Insurance carriers is 1-to-1. So for every dollar they have out in the market, they've got $1 in reserve. So if everyone with Mutual of Omaha passed away on the same day, Mutual of Omaha could pay that out and stay in business. So I don't know about you, but I deposit my money safely into a bank account. I depend on the insurance carrier to give me money in case something happens. So a lot of banks got in trouble in 2008. And I don't know about you, but I definitely don't want to be in a position where I'm dependent on a bank to help me with my mortgage if something were to happen. So just kind of educating them and, you know, talking about that solvency ratio. I mean, sometimes they don't know what the heck you're talking about, but when you educate them on that, you let them know that, you know, insurance carriers, you know, are in the best position to take care of your mortgage if God forbid something were to happen to you. Banks are not. You know, that's why a lot of banks got in trouble. So I find when I talk about that, they're like, oh, okay, yeah, let me, you know, let's get something better in place. So just talking about that's helped me out tremendously.
I mean, the simplest way, guys, on a plan through your bank is they don't offer this. They only offer accidental. So I'm glad you have some coverage in case you pass of an accident, but let's make sure in case you have any sickness, you die of natural causes, you and your family are protected. Fair enough? Okay, let's move on. That's one of the easier ones to just get over.
Yep.
An accidental coverage, let's move on.
Yeah.
Yep. One extra line to add on. Hey, they don't offer this. That's why they send a state licensed underwriter out instead. I just hold up my license one more time and then I'm right back through it.
Yep.
So same thing.
Perfect. Okay. On to the next one. I don't feel like giving you my personal information. So you get to the socials, the bank accounts. I just don't feel comfortable giving you my personal information.
Do you see how this plan and what we're showing you makes financial sense for your situation to protect your mortgage?
Yeah.
Okay. So does this financially make sense for you and your budget on a monthly basis? Can you afford to do this?
Financially, it's fine. It's not the dollar amount. I just don't feel comfortable giving anyone my social.
I understand. So is it that you just don't trust me?
I don't know you.
Okay. So here again, let me just go over this one more time, Mary. This is my state license to do business in the state of Arizona. We can do a few things to make sure that you're comfortable. Number one, I'll even give you my driver's license. I'll whip out my driver's license to show them my driver's license matches my state required ID. And if you'd like, we can look. You can look me up online on the state insurance boards to see that I'm legit and real. And my sole goal today, Mary, is to make sure you and your family are protected. I'm not here for any other reason but to help you out. Does that make sense?
Credibility. Do you have them take a picture of it?
If they feel I go, would you like to take a picture? Feel free to, but I just kill them with credibility, right? And then I ask them, do you not trust me? I've never had one person say, yes, I don't trust you.
Yeah.
Right? Like, because if they do, I'm like, yeah, all right, I'm out the door. Right? But you know, do you trust me? You know, is it that you don't trust me? No, I trust you. Okay. Well, let me just make sure you know who you're dealing with, right? So you just build up your credibility again and just say, hey, this is not me, whether it's me or any one of our team members, we're all required to do the same information because the insurance carriers require this, not me, right? If it was up to me, I'd approve everybody, but it's not. It's up to them, and they want to make sure you're serious.
Okay.
It hasn't happened to me in like over a year, and I think it just comes back to the setup. If in the setup in the beginning, if you let them know that after we look at these options, find one that makes financial sense, we will be point to the iPad, touch the iPad. We will be sending off a request for coverage today, where they're going to have to verify your identity, make sure you are CHUR, and most importantly, see if you qualify. So like I let them know up front. That way, when it gets to that point, there's when I pull out the iPad, they know I'm doing that part at that point. So if you just set it up
Yeah.
correctly, people don't give that objection.
Yeah, and I just want to touch base on Brandon Kitchens gave a training in the AZ conference on Monday that he said that I think all of us here, we show the license first and foremost, but he takes it one step further and has the NIPR website pulled up and educates the client on how they can look up other agents and myself as well. So then he shows them the NIPR website, types into his license number, and then his name pops up, or our name will pop up, and we're educating them on how they can look up if they ever meet with another agent, or if they have someone over the phone who's not providing their license number. And then I also think, like, just reiterating, like, these are non-medical, right? So they're going to link your social security number to your medical records if you ever came to that situation. But I think his setup of showing them the license and then giving them a way to verify it is going to build your credibility, because you're not hiding anything. And then right after he gives them that, he tells them exactly what we're going to do today. I'm going to need a little bit of your personal information, which includes your social security. Then they're going to ask for your authorization to access your medical records. And then they're going to ask for your beneficiaries. And then we're going to need an account and your banking information, including your routing and account number. And he's saying that right at the beginning, right after he just validated that he's a state licensed representative and that he's an active agent.
Fighting off the objection from the start. That's awesome. I've gotten this one quite a few times. I'd like to hear what you guys have to say. So there's Dave Ramsey fans out there that don't like whole life at all. Okay, so I'm 78 years old. I'm a big Dave Ramsey fan, and I don't qualify for any term coverage. I want term, but I just don't like whole life. So what are you guys saying to that?
And if straight up, like, agree with them, oh, perfect, I'm so glad you like Dave Ramsey, he's a great guy. Let me just ask you, what do you not like about whole life? Is it the fact that it doesn't expire, or do you not like the price? I got an answer ready for both. If they say, well, they're not going to say that it doesn't expire because they want something that's going to be in place. And so they'll probably try to, like, beat around the bush a little bit, but normally you can redirect the conversation. And then you make him sound, I don't want to say make him sound stupid. Like, I'm not trying to make him sound stupid, but gotcha. So you're concerned that it will pay out, or I'm just confused. Like, you do want money going to your family? Like, I'm just help me understand it a little bit. And you can kind of walk them down the path, or maybe they misunderstand what whole life is. Maybe they think whole life is something else. I don't want the whole life. I don't want that one. That's the one that expires. I want the one that pays out. Well, now they're thinking about term, but they just don't know the terminology because they're not licensed. So I think a solution to answering almost every objection is asking questions. You just got to make sure you ask questions to lead them down the path you want. Or regardless of the objection, if you're asking good, controlled questions, you can control the conversation.
To
So I
add
like
to
to.
that question.
Oh, go ahead. Go ahead.
About that.
No, you're
To
good,
add
Nina.
to
Go ahead.
to add to that question, so obviously, most of the time it's cost with whole life for them. So they like term because it's cheaper. So another question that they could add to that is, it just sounds way too expensive for the benefit. So how would you object to that, or rebuttal to that?
Mary, you spent your entire life and you've got savings. You say it with empathy, but you're like, you spent your entire life saving and you've got $1,700. What's the biggest check you've ever received? What's the biggest check you've ever written? So what we're doing right now is we're leaving a legacy, or we're taking care of your final expenses to where, your daughter that is a lawyer, even though she has great income, that's still, I don't care who you are, will put a dent in your finances if you have to shell out $15,000, $20,000. So what you're doing is that you're putting something in place to where you're not burdening your families. People underestimate the value of $20,000 or $15,000 because most of the clientele that we go sit with, they've never seen a check for $10,000. That's just the truth. So what we do is, they have these delusions of grandeur where they're going to get a term policy that's going to pay them out $500,000. That's just not the case. So, you educate them. And I like what, I don't remember who said it, but I like, re-educating them on what a whole life policy is and what a term policy is. A term has an ending. Term ends. Companies set it up to where it ends probably before you're supposed to pass away. Whole life is a definite payout. Okay. So just kind of educating the client, I think, is something that I've done, in the last year a lot better. Instead of just looking to just run, we steamroll through objections, but you also want to educate them why this is the better option. So if you ask them leading questions, if you educate them, you want them to ultimately get to the conclusion that this is a great option for them. So
I'm going to ask Gage this question. So
Yeah.
Gage, I'm a Dave Ramsey fan. I don't like whole life. The benefit 20,000 that you just showed me for $200 a month, that's way too expensive for me. And I just want to save up that 20 grand, and I have 40 grand in my bank account.
Gotcha. So I typically think you're going to run into these people who've already had term policies and now they're expired, and that's why you're meeting with them. And so then reiterate, and I'm assuming you probably had a term policy, right?
Mm-hmm.
Okay, gotcha. So what were you paying on that?
It was $40 a month for 200,000.
Gotcha. And you paid on that for 30 years?
Mm-hmm.
Okay, gotcha. So let me just show you this real quick, and I'll pull out my calculator, take 40 times 12 times 30, and show them, well, we just threw away $15,000 over the last 30 years. So let me ask you how that would make financial sense to potentially throw away another 10 or 15,000. And John, let's be honest here. Let's not downplay $20,000 here, right? Because I'm assuming that if you got a $20,000 check, we'd be doing some dances right now, right? We'd be pretty freaking happy, no matter what situation we're in. So I don't want you to downplay $20,000, because $1,000 is 10 $100 bills. So I want you to visualize how many $100 bills that would actually be for your child. And I want you to remember that term is short for terminates. So do you want to be in this position 10 years from now? Do you want to be in this position 15 years from now, meaning with a new agent, and you being disappointed for how little amount of coverage you can get because your age, or you may not even be qualified for it, and you have to go on a 2-year wait period? So let's not take advantage of your health here, because this is the cheapest the $20,000 is ever going to be. So let's make sure we put this in place so we give a guaranteed payout, because $20,000 is a good amount of money. I mean, most Americans are making around 40,000. So you're going to give your child half year's worth of what they work for, 40 hours a week. So I understand that $20,000 doesn't sound as sexy as 200,000, but the reason why 200,000 sounds so sexy is because they're banking on you not dying.
Boom. Term equals terminates. That's awesome. Good, good. Last question here before we get back to dial day. We don't really hear this one too often because, again, we build that trust from the very start by showing them our credentials. So I don't trust you. How do you build up their trust when they're already looking at you sideways from the start?
If it's okay with you, Nina, I want to kind of the trust thing. If you set it up, use a financial inventory, use a license, that's not something I run into a lot. One thing I do run into a lot, and maybe in the chat, you guys could drop a 1 below if you guys run into this too, where people are asking about when the money comes out, or they're like, wait, you mean the money comes out? Like, don't we have some time to think about it? Like, drop a 1 in the chat if you guys ever have objections about the money situation. Because it's one of those things that, if you're not making it clear about the financials. So I just want to kind of, if it's okay with you, Nina, 90 seconds about setting that up and how to go over it. Okay, cool. So first things first, the setup, right? I think you've probably heard that 20 times. If there's one takeaway from this, you got to get good at setting it up. In your setup, you have to make it clear that that's how this works, where, hey, we're going to get all these companies, got this financial inventory, 2 minutes of health questions, 2 minutes of money questions, comfortable, affordable, see if you qualify, iPad. The iPad, they're going to ask for like your personal information. They're going to have to validate your banking info, because if you do qualify, the first draft comes out in 1 to 3 business days, which is good news, Mary, because that means that you got covered. So if the money comes out, that's a good thing. But first things first, we're not doing anything if it doesn't make financial sense to you, and if it doesn't make financial sense to me. Does that sound fair?
Yep.
So that's kind of like, I say that in my opening, where I make it very clear about what the end goal is, but then I pull it all back to let them know I'm not trying to push anything on you. We got to be on the same page here. If it doesn't make financial sense, we're not doing anything. Does that sound fair? And then what they always say, they say, yeah, it's fair. Or they'll say, I'm not sure if we're ready to do anything today. And if they say that, again, you have to hammer that home in the beginning and make it clear. I'm not just the quote guy. I'm not here to just show you the options so you get always to think about it. Okay, that's why there's a free look period. You're going to have time to adjust from 100,000 to 150 or 100,000 to 50,000 after you guys sleep on it. But right now we don't even know if you qualify. So we have to get something submitted today. That way there's something to think about. And if you do get approved while you're thinking about it, that's good news, because that means you're covered while you're thinking about it. So God forbid you're thinking about it, you don't come home tomorrow from work. The good news is you at least have whatever we try to see if you're approved for it today, which means you're covered, money comes out, you got something in place, because I wouldn't be here if you didn't have a need for it. Does that make sense? Bring up the tone a little bit, et cetera, et cetera. So that's something that if you take just a little extra time in the beginning and like almost try to get them to throw the objection at you then, so you can be very clear about what we're doing today and why we're doing it. When they ask, well, what don't we have the 30-day thing? Like today? Like what? Yes, Mary, that's the way this works. Like I mentioned in the beginning, you have to be able to say that. If you don't mention it in the beginning, you're toast. Like I mentioned in the beginning, that first draft comes out in 1 to 3 days. If you get approved, which we still don't know yet, but Mary, that's good news. That means you're covered. They're not going to take your money if you're not covered. That means you're worth 100,000. That means you're worth 20,000. That's really good news if the money comes out, because I sit with a lot of families. I'm telling you, this Americo company, they're very selective on who they take. So if, God forbid, if for whatever reason, if you don't get approved, that's cool, I'm a broker. But if the money comes out, that's such good news, because that means you're covered. And then they give you some time to adjust it, that 30 days, if you need to move it up or down. But thank goodness you got that peace of mind you're looking for. Does that make sense? So like, it's a good news. Money coming out is a good thing. Got to make it like a good thing. You can't like dance around it and say, is that okay with you? Like, this is awesome, because that means we got the job done. Congratulations. So that's my approach on it and the setup. And again, if they like hesitate for the bank info, you got to make it like a good thing. Like, hey, I hope they take your money, because that means you're covered. And I said with a lot of families that don't. So this is really good news. I can go on forever about this, but I think that's a big one. A total tangent, but like that's crucial. That is so crucial to overcome.
That was money, Alex. It was good. It was real good.
That was money. Drop a
I learned
money.
that from you, Clay. Hey, kudos to Clay. I learned that from Clay back in April. He kind of helped me shift that a little bit. So that's all Clay.
Everyone drop a money sign in the comments below if this training helped. And dial days payday. Let's dial. Let's book up a full schedule. 16 to 20 appointments on the books the next 2 days, and let's crush it.
Let's go.
Let's go. You guys have a good rest of your day.
Bye.